Rabbit gets his first real job. First day. First paycheck. Rabbit is 22 years old. Salary, 4,000 leaves per month. Rabbit does the math in his head. 4,000 per month times 12 months. 48,000 leaves per year. Rabbit has never seen this much money in his life. Rabbit is finally going to be rich. Rabbit is already planning what to buy. 2 weeks later, payday. Rabbit opens the envelope. Contract said 4,000 leaves. Check says 2,847 leaves. Rabbit blinks, reads it again. 2,847. Rabbit walks to HR Cat. There's a mistake. I'm supposed to get 4,000. HR Cat doesn't look up. That's after taxes. What taxes? HR Cat slides a paper across the desk. Paycheck stub. Every line is a punch to the stomach. Gross pay, 4,000 leaves. Federal income tax, minus 720 leaves. State income tax, minus 200 leaves. Social Security, minus 248 leaves. Medicare, minus 58 leaves. State disability, minus 28 leaves. Total deductions, 1,254 leaves. Net pay, 2,746 leaves. Wait, the check said 2,847. Close enough. Rabbit is too shocked to care about 100 leaves. Rabbit just lost 1,254 leaves from a 4,000 leaf paycheck. That's 31%, almost 1/3. Gone. Before Rabbit even sees it. Where does it go? HR Cat is already looking at her computer. Taxes. I know it's taxes, but where? HR Cat shrugs. Government. This is the beginning. This is where Rabbit learns. The game was rigged before he even started playing. Part 1. The invisible deduction. Rabbit goes home. Rabbit is angry. Rabbit earned 4,000. Rabbit got 2,847. Rabbit didn't agree to this. Nobody asked Rabbit. Nobody gave Rabbit a choice. Rabbit calls his friend. Did you know they take 30% of your paycheck? Friend laughs. Of course. Everyone knows that. Why didn't you tell me? I thought you knew. Rabbit didn't know. And now Rabbit is looking at his apartment. Rent, 1,200 leaves per month. When Rabbit calculated if he could afford it, Rabbit used 4,000, not 2,847. Rabbit is already behind, and Rabbit just started. The next month. Rabbit looks at his paycheck more carefully. Federal income tax, 720 leaves per month, times 12 months, 8,640 leaves per year. Social Security, 248 per month, times 12, 2,976 per year. Medicare, 58 per month, times 12, 696 per year. State income tax, 200 per month, times 12, 2,400 per year. Total per year, 14,712 leaves. Rabbit earned 48,000. Rabbit actually gets 33,288. Rabbit lost 14,712 to taxes before buying a single thing. But Rabbit is not done paying taxes, not even close. This is just the beginning. Part 2. Death by 1,000 cuts. Saturday morning. Rabbit needs groceries. Cart total, 100 leaves. Cashier Cat. That'll be 108 leaves. The sign said 100. Plus tax. Sales tax, 8% on everything. Rabbit fills up the car. Gas pump, $3.50 per gallon. Rabbit doesn't see the breakdown, but buried in that price, federal gas tax, 0.18 per gallon. State gas tax, 0.40 per gallon. Every gallon. Before the gas even reaches the pump, hidden. Rabbit buys a car. Price, 20,000 leaves. At the dealership. With tax and fees, that's 22,400. Rabbit wasn't expecting that. Sales tax, 1,600 leaves. Registration, 200 leaves. Documentation fee, 300 leaves. Emissions fee, 50 leaves. Tire fee, 15 leaves. Title fee, 85 leaves. 2,400 in taxes and fees on a 20,000 car. Every month, Rabbit gets bills. Phone, 60 leaves. Bill shows, 72 leaves. Taxes and fees, 12 leaves, 20%. Internet, 50 leaves. Bill shows, 58 leaves. Taxes and fees, 8 leaves, 16%. Electricity, 100 leaves. Bill shows, 115 leaves. Taxes and fees, 15 leaves, 15%. Every single bill. Rabbit adds it up at the end of the year. Sales tax on purchases, 800 leaves. Gas taxes, 278 leaves. Utility taxes, 420 leaves. Car registration, 200 leaves. Income tax from paycheck, 14,712. These other taxes, 1,698. Total, 16,410 leaves. On a 48,000 salary, that's 34%. And Rabbit still hasn't included the biggest hidden tax, rent. Rabbit pays $1,200 per month to landlord Cat. Rabbit doesn't own the building, but landlord Cat pays property tax. Around $12,000 per year on the building. 6 apartments in the building. Landlord Cat passes that cost to tenants through higher rent. Rabbit's share, around $2,000 per year. Rabbit is paying property tax on a building Rabbit doesn't own. Hidden in the rent. Real total taxes, 18,410 leaves per year on 48,000 income. 38%. Not 31% like the paycheck said. 38%. More than 1/3 of Rabbit's life goes to taxes. Part 3. Where it goes. Rabbit wants to know, where do my 18,410 leaves actually go? Federal budget breakdown. Social Security, 21%, 3,866 leaves. Medicare, 15%, 2,762 leaves. Medicaid, 16%, 2,946 leaves. Defense, 13%, 2,393 leaves. Interest on national debt, 8%, 1,473 leaves. Veterans benefits, 4%, 737 leaves. Everything else, 23%, 4,234 leaves. Social Security. Rabbit is 22 years old. Rabbit pays in 2,976 leaves per year for the next 45 years. Rabbit will pay 133,920 total. Current projection. Social Security Trust Fund runs out in 2034. That's 9 years from now. Rabbit will be 31. Still 36 years away from collecting. Rabbit is paying for something Rabbit will never receive. Medicare. Rabbit is 22 and healthy. Rabbit doesn't use Medicare. Medicare is for rabbits over 65. Rabbit pays $696 per year for 43 years. For healthcare, Rabbit doesn't get. Current Medicare recipients? They paid in way less. They're taking out way more. Rabbit is paying the difference. Defense spending. 2,393 leaves per year. Buys tanks, fighter jets, aircraft carriers. For wars in countries Rabbit can't find on a map. Rabbit has never seen a military cat. Rabbit will never use these weapons, but Rabbit is paying for them. Interest on national debt. The government borrowed 31 trillion leaves, most of it before Rabbit was born. For programs Rabbit didn't vote for. For spending Rabbit didn't approve. 1,473 leaves per year. Just paying interest. Not paying down the debt. Just interest. On debt Rabbit didn't create. Rabbit reads about government spending. 800,000 leaves to study if rabbits like cocaine. They do. 500,000 leaves to study shrimp on treadmills. 2.5 million leaves for a Super Bowl commercial about the census. Rabbit's taxes paid for this. Rabbit didn't get a vote. Rabbit didn't get a choice. Rabbit just gets the bill. Part 4. The Rich Rabbit Loophole. Rabbit's boss makes 500,000 leaves per year. Rabbit makes 48,000. Rabbit pays 38% total. Boss should pay more, right? Federal tax brackets. 22% bracket, 44,000 to 95,000. 24% bracket, 95,000 to 182,000. 32% bracket, 182,000 to 231,000. 35% bracket, 231,000 to 578,000. Boss makes 500,000. Boss is in the 35% bracket. Plus state, Social Security, Medicare. Boss total, around 45%. Wait, Rabbit pays 38%. Boss pays 45%. Only 7% more. Boss makes 10 times what Rabbit makes, but only pays 7% more in taxes? Then Rabbit learns about deductions. Boss has an accountant cat. Accountant cat knows the code. Boss owns a burro. Mortgage interest deduction. Saves $15,000 per year. Boss has 3 kids. Child tax credit. $6,000 saved. Boss maxes out $401K. $22,500 contribution. All deductible. Saves $7,875 in taxes. Boss donates to charity. $20,000 per year. Deductible. Saves $7,000. Boss has a home office. Deduction. $10,000. Saves $3,500. Boss drives a business car. Depreciation and expenses. $8,000. Saves $2,800. Total tax savings. $42,175. Boss's actual effective rate after deductions. 30%. Boss makes 10 times more than Rabbit. Pays lower percentage. But it gets worse. Ultra-rich Investor Cat doesn't have a salary. Investor Cat owns stocks. Stock goes up. Investor Cat sells. Profit. 1 million leaves. Tax rate. 20%. Capital gains tax. Not 35%. Not 45%. 20%. Investor Cat made 1 million. Pays 200,000 in tax. Rabbit made 48,000. Pays 18,410 in tax. Investor Cat made 20 times more. Pays half the tax rate. The tax code is 2,600 pages. Written by rich cats, for rich cats. Poor rabbits pay 38%. Rich cats pay 20%. Not because rich cats cheat, because the system is designed this way. Part 5. The Payroll Prison. Rabbit learns there are 2 types of income. Earned income, money from working, salary, wages, bonuses, taxed at 38%. Unearned income, money from owning, dividends, capital gains, rent, taxed at 20%. The system punishes work. The system rewards ownership. Rabbit works 40 hours per week. Gets paycheck. Government takes 31% before Rabbit sees it. Rich investor Cat sits by the pool, owns stocks. Stocks go up 8% per year. Sells some. Government takes 20%. After Cat already has the money. Cat can choose when to sell. Cat can choose which stocks to sell. Cat has control. Rabbit has no control. Tax comes out before Rabbit gets paid. No choice, no timing, no strategy. This is payroll prison. And here's the real trick. Rich Cat doesn't even have to sell. Rich Cat takes a loan against the stocks. Banks will loan 50 to 70% of stock value. Interest, 4% per year. Rich Cat borrows $500,000, pays $20,000 per year in interest. Stocks go up $40,000, 8%. Rich Cat has $500,000 cash to spend, paid 0 in taxes. stocks still growing. When cat dies, heirs inherit at stepped-up basis. Original gains never taxed, ever. This is how billionaire cats buy mansions and yachts and pay zero in income tax. Rabbit cannot do this. Rabbit has no stocks to borrow against. Rabbit has a paycheck. Paycheck is trapped, taxed before Rabbit sees it. No escape. Rabbit is in prison, and Rabbit doesn't even know it. Part 6. The Promise. Election year. Politician cats are making promises. Rabbit is 26 now, been working 4 years, paid $73,640 in taxes, still living paycheck to paycheck. Politician cat number 1. I will cut your taxes. Rabbit watches the debate, gets excited. Politician cat number 1 wins, passes big tax cut. Rabbit checks his paycheck. Taxes went down. Rabbit saves 200 leaves per year. Rabbit is happy. Until Rabbit reads the fine print. Rich cats' taxes went down $50,000 per year. Ultra-rich cats, $500,000 per year. The tax cut was for them. Rabbit got crumbs. 4 years later, different election. Politician cat number 2. Tax the rich. They don't pay their fair share. Rabbit votes for this one. Politician cat number 2 wins. Passes new tax law. Raises taxes on anyone making over $400,000. Rabbit thinks, good, I make $52,000. This doesn't affect me. Monday morning. Rabbit gets to work. Boss calls a meeting. Boss makes $450,000 per year. Boss just got hit with the new tax. Boss's taxes went up $15,000 per year. Boss. Due to increased costs, we're freezing all salaries this year. Rabbit was expecting a 5% raise. 2,600 leaves per year. Gone. 2 months later. Rent increase notice. 1,200 becomes 1,400. That's 2,400 more per year. Rabbit can't afford it. Not without the raise Rabbit was expecting. Rabbit looks for a cheaper apartment. Finds one for 1,100. But it's smaller. Further from work. Worse neighborhood. Rabbit packs his stuff. Rabbit moves. Rabbit didn't get a tax increase. Rabbit got something worse. Frozen salary. Higher rent. Forced to downgrade. All because of a tax increase on the rich. Meanwhile, ultra-rich investor cat with $50 million in stocks pays 20% capital gains. Same as before. Nothing changed. The tax the rich plan never touches the actual rich. Because the actual rich don't have salaries, they have capital gains. And politician cats own capital gains too. They're not going to tax themselves. Both politicians lied. Both made promises. Both protected the rich. Rabbit paid for it. Again. Rabbit is 28 now, sitting in his smaller apartment, calculating. 6 years of work. Total earned. 302,000 leaves. Total paid in taxes. 114,760. 114,760 gone. For what? Roads Rabbit uses? Maybe 2% of the money. Police that came 2 hours late when Rabbit called? 1%. Fire department Rabbit never needed. 0.5%. Social Security Rabbit will never see. 23%. Medicare Rabbit won't use for 37 years. 15%. Paying interest on debt from before Rabbit was born. 8%. The rest? Rabbit has no idea. Government waste. Politician salaries. Programs Rabbit never voted for. And Rabbit still has to pay. No choice. Don't pay? Go to jail. Part 7. The Audit. March. Rabbit files taxes. Rabbit gets a refund. 800 leaves. Rabbit is relieved. 2 months later. Letter arrives. IRS logo. Rabbit's stomach drops. You have been selected for audit. Rabbit panics. Rabbit did nothing wrong. Rabbit claims standard deduction. No fancy tricks, just W-2 and done. But IRS wants receipts, proof of income, proof of deductions. Bank statements. Rabbit spends 2 weeks gathering documents, digging through emails, finding old receipts, making copies, organizing folders. Rabbit has to take a day off work, unpaid, to meet with IRS. IRS agent Cat looks through everything, finds a discrepancy. Rabbit forgot to report 40 leaves in bank interest. 40 leaves. IRS. You owe 12 leaves in back taxes, plus 15 leaves penalty, plus 8 leaves interest. Total, 35 leaves, plus the unpaid day off work, 180 leaves, plus 2 weeks of stress, plus the fear. All for 40 leaves Rabbit forgot. Rabbit pays. Rabbit is exhausted. Next day at work, Rabbit's coworker mentions he got audited too. Coworker makes $200,000 per year. Coworker has accountant Cat. How'd it go? Rabbit asks. My accountant handled it. Took 20 minutes. No issues. Coworker didn't take time off. Coworker didn't stress. Coworker paid accountant 500 leaves. Accountant solved everything. Rabbit couldn't afford an accountant. Rabbit did it alone. Rabbit lost a day of work. Rabbit paid penalties. IRS audits poor rabbits at higher rates than rich cats. Because poor rabbits can't afford lawyers. Poor rabbits can't fight back. Rich cats have accountants who know the system. Rich cats have lawyers who can delay. Rich cats can fight. IRS knows this. IRS goes after easy targets. Rabbit sits in his car after work, staring at the steering wheel. I can't win this game as a W-2 employee. The system is designed to extract maximum money from people who can't fight back. Rabbit just figured that out. Part 8. The Choice. Rabbit is 30 now. 8 years of work. Paid $153,280 in taxes. 153,280 leaves. Gone. Rabbit has 2 paths forward. Path 1. Stay in payroll prison. Work 40 hours per week, get paycheck, pay 38%. Forever. Until 67. Then retire on Social Security, if it exists. Path 2. Learn the game. Stop only trading time for money. Start building assets. Assets that generate income taxed at 20%, not 38%. Rental property, dividend stocks, small business, royalties. The rich cats aren't smarter. They just play a different game. Rabbit works for money. Money gets taxed at 38%. Rich cat makes money work for him. Money gets taxed at 20%. Nobody teaches this in school. School teaches Rabbit to get a job, get a paycheck, pay taxes, repeat. School doesn't teach how to build assets, how to generate passive income, how to reduce taxes legally, how money actually works. Because the system needs paycheck rabbits. Someone has to pay 38% to fund everything. If everyone paid 20%, the system collapses. But Rabbit can learn. The rules are public, written in 2,600 pages, available to anyone. Rabbit just has to read them. Part 9. The Reality. Rabbit is 35 now. Rabbit learned the game. Rabbit still has a job. Salary, $65,000 per year. Rabbit still pays income tax. But Rabbit also has Side LLC, consulting, freelance work, generates $18,000 per year. Business deductions, home office, car, equipment. Taxable income after deductions, $12,000. One rental property, bought for $180,000. Mortgage, $1,200 per month. Rents for $1,800 per month. Positive cash flow, $600 per month. But depreciation deduction on taxes, $6,000 per year. Taxable rental income, 0. Dividend stocks, portfolio, $80,000. Dividends, $2,400 per year. Qualified dividends taxed at 15%. Maxed out 401k. $22,500 per year contribution. Reduces taxable income. Rabbit's total income. Job, $65,000. Side business, 18,000. Rental, 7,200. Dividends, 2,400. Total, 92,600. Rabbit's taxable income after deductions. Job, 65,000 minus 22,500, 401k, equals 42,500. Side business, 12,000 after deductions. Rental, 0, depreciation offset. Dividends, 2,400. Total taxable, 56,900. Tax owed, 9,800. Effective rate, 10.6%. Last year, when Rabbit only had the job, income, 65,000. Taxes, 18,200. Rate, 28%. This year, income, 92,600. Taxes, 9,800. Rate, 10.6%. Rabbit makes 42% more, pays 46% less in taxes. Rabbit is playing the game now. Closing. Young Rabbit, 22 years old, just got his first job. Opens his first paycheck. Expected 4,000. Got 2,847. Young Rabbit is angry. Young Rabbit finds older Rabbit at a coffee shop. This is theft. They took 30% before I even saw it. Older Rabbit remembers. Older Rabbit was angry too. 13 years ago. Same feeling. It's not theft, Older Rabbit says. It's the game. The game is rigged. Yes, but the rules are public. You can learn them. You can use them. Young Rabbit is skeptical. You're saying I should become a tax cheat? No. I'm saying you should stop being just a W-2 employee. W-2 employees pay the most. Business owners pay less. Investors pay even less. All legal. All in the code. Older Rabbit opens laptop. Shows Young Rabbit the numbers. I used to pay 28% on 65,000. Now I pay 10.6% on 92,600. Same tax code. I just learned how to use it. Young Rabbit stares at the screen. How? Older Rabbit starts writing. Max out 401k. Reduces taxable income. Start a side business. Business expense deductions. Buy a rental property. Depreciation offsets rental income. Invest in dividend stocks. Qualified dividends taxed at 15%. Form an LLC. Separate business income from personal. This is legal? All of it. Rich cats have been doing this for decades. You just weren't taught. Start small. Learn as you go. You're 22. You have time. The system won't change. The system is designed this way. But you can change how you play. Young Rabbit is still angry. But now, Young Rabbit is thinking. Is it fair? Older Rabbit pauses. No, it's not fair. But fair doesn't matter. The rules exist. You can ignore them and pay 38% forever. Or you can learn them. Paycheck rabbits pay the most. Owners pay the least. Decide which one you want to be. 3 months later, Young Rabbit opens an LLC. Costs 800 leaves. Files as S-Corp. Opens business bank account. Young Rabbit starts a side consulting business. Makes 500 leaves the first month. Deducts home office, 200 leaves. Deducts laptop, 100 leaves. Taxable income, 200 leaves. It's not much, but it's a start. 1 year later, Young Rabbit buys first rental property. Small condo, 150,000 leaves. Rents for 1,200 per month. Mortgage, 950. Cash flow, 250. Young Rabbit files taxes. Depreciation deduction, 5,455. Rental income, 3,000. Taxable rental income, minus 2,455. Young Rabbit's W-2 income, 52,000. Side business income, 8,000. Rental income, minus 2,455. Loss offsets other income. Total taxable, 57,545. Tax owed, 9,200. Effective rate, 15.3%, down from 28%. Young rabbit calls older rabbit. It's working. Older rabbit smiles. Keep going. 10 years later, young rabbit is 32, owns 3 rental properties. Side business generates $40,000 per year. Still works the W-2 job, $75,000 per year. Total income, $130,000. Total taxes, $18,000. Effective rate, 13.8%. Young rabbit is not rich, but young rabbit is not trapped. Young rabbit has options. Young rabbit has cash flow. Young rabbit can quit the job if needed. Young rabbit is building wealth, using the same system that used to trap him. The tax system is not designed to be fair. The tax system is designed to extract maximum revenue from people with the least ability to fight back. W-2 employees can't hide income, can't time income, can't deduct expenses, can't use depreciation, can't form entities. The system knows this. The system is built on this. But the rules are public. Anyone can learn them. Anyone can use them. You just have to decide. Stay a paycheck rabbit, pay 38% forever. Or learn the game. Start small, build assets, use deductions, pay less. The system won't change, but you can. Rabbits together strong.